Right, ladies and gentlemen, so welcome to today's session. And today we are looking at, great things. Of course, yesterday we were able to look at the concept of abnormal losses. So today we shall be looking at abnormal gains. We shall be able to go forward, ladies and gentlemen, and discuss the issue of by-products, joint products, and by-products. And then, of course, the last lesson, which will be next week on Thursday evening, I'll be able now to do what we call work in progress. Yeah, both closing work in progress and opening work in progress. Those are the only areas which are left. So let's see how far we can push this particular area in an hour. So, ladies and gentlemen, this is what we are told here. And I would want to basically start with a question that I did yesterday for purposes of a recap. So this is example 3. We are told during May, the following costs were incurred in a process. Materials were 1,000, which cost us 9,000 Kenya shillings. Labor was 18,000, overheads were 13,500. Normal loss is 10% of the input, which was expected. Actual output was 850 kilograms. Losses are sold as scrap for Kenya shillings 9 per kilogram. So they want us to calculate the cost per kilogram and prepare a process account and a loss account. What do you think, ladies and gentlemen, will be the very first thing for us to do, for us to be able to tackle this question? What do you think will be the very first thing for us to do, for us to tackle this question effectively? Can you kindly tell me, what do you think in this case here should be the very first? Yeah, we should develop what we call a throughput account. We shall develop what we call a throughput account. A throughput account, which basically is an account which gives us movement of units. Yeah, basically this is a movement of units account. Yeah, very, very important. Movement of units account. And this is how it shall look like. It's just a normal T account. So we have our normal T account here. So we have input in the form of materials. Yeah, 1,000 kilograms being put in. And then, ladies and gentlemen, we have our normal loss. So what is our normal loss percentage? Normal loss, they have told us it is 10% of the input. 10% of 1,000, which gives us 100, like that. And then, ladies and gentlemen, in the same question, they have given us the actual output. They have given us the actual output. So the actual output, they have given us a figure of 850. 850. So now I should be able to balance this account. We said, please balance this account. And if the balancing figure goes this side, we shall call it an abnormal loss. Abnormal loss. If the balancing figure goes to the credit, we call it an abnormal loss. So, and of course, I'll go to the credit because I can see this is 1,000. Yeah. So shall I go to the credit? This is 1,000. Yeah. So 1,000 minus this will end up giving me how much? Yeah, please talk to me this afternoon. 50 bob. Sawela, 50 bob. Thank you very much. Not 50 units, I mean, not bob. 50 units. Now, remember yesterday, I tried explaining to all of us that generally, when you look at the total actual loss, total actual loss, you see, into the process, we did put in 1,000. We did put in 1,000, but we actually got 850. So 1,000 minus 850, this gives me 150 as the total loss. And this total loss of 150 is more than the normal loss. We said that whenever the actual loss is more than the normal loss, then you're going to get what we call an abnormal loss. We're going to get what we call an abnormal loss. So the abnormal loss in this case, you can see the actual loss is 150 and the normal loss is 100. So if you subtract 100 there, then we'll be able to get an abnormal loss Yeah, abnormal loss of what here 50, but we don't have to go that way. We don't have to go that way at all. For us, it's all about balancing the throughput account. Yeah, this throughput account, the moment I've been able to put the input, then I account for the entire input. So I have normal loss, which has been given as 10% of the input, 100. They have given me actual output of 850, come and balance. So you can see there, balancing figure is on the credit side. If the balancing figure is on the credit side, then that will be an abnormal loss. If the balancing figure was to come on the debit side, it will be an abnormal gain. It will be an abnormal gain. So please master this. Now, after this, then you shall be able to go ahead and give us the process account. Go ahead and give us the process account. Can I rub this? Can I rub this? Because it's a question I done yesterday. Yeah. So then go, get ahead and do for us the process account. And this is how our process account will look like. So we have description, process account. Yeah. So we have here description. Yeah. We have units, cost per unit, value. You do like this. So we have description. Yeah. Units, cost per unit, and the value. Yeah. So the handout is in the group already. The handout is in the group already. We don't share handouts here. I share handouts to the paid group so that we can only have those students who have paid RCM benefiting from the very best notes, highly super summarized notes. Yeah. So somebody can reshare in the group. Paid group, remember, only paid group. Please, if you are sharing, be kind to Mwalimu, who is doing lots of research on this. You only share to the paid group. Of course, I believe that every other student will be able to join RCM College by giving us a shout. This is our number. Yeah, this is our number, 0793 So, ladies and gentlemen, once you finish putting up this, are you able to mention there why for yes? Why for yes? Are you able to mention there why for yes? Thank you so much. So then I can begin. So now what you're going to do, ladies and gentlemen, first of all, it is to map out. Let's map out our throughput. Let's bring our throughput account here. We bring our throughput account right away here. I hope you remember the throughput. So we have here the input. The input, which basically will lead to what we call material cost. Yeah. So 1,000 units. And what is the total value? What is the total value of these 1,000 units? Yeah. So there are 1,000 units, ladies and gentlemen. You can see they are here. 1,000 units are here. Yeah, they're costing 9,000. The value is 9,000. Yeah. So remember, once you brought in the main fabric, yeah, you brought in the main material. Now you need to bring what we call conversion. Conversion is made up of two items, labor and overheads. So you can see labor is 18,000, overheads is 13,500. $18,000, and then we have overheads. Overheads, we have 13,500. Overheads, we have 13,500. Yeah, great. And then we have normal loss. So we have normal loss. Are you able to remember the normal loss units? Are they able to remember the normal loss units? 100. 100. What do we normally do with normal loss units? Can somebody remind us? What do we normally do with normal loss units? we scrap them, sell them at a throwaway price. If it is given there, we shall always sell them. Yeah, we multiply them by the scrap value. So has the scrap value been given in this question? Yeah, you can see in this case here, losses are sold at a scrap value of 9. And remember, at times the scrap value is not given. If scrap value is not given, you should always multiply whatever quantity you have here with 0. But now here we have a scrap value 9. So which gives us 900. Ladies and gentlemen, apart from that, we have actual output. So the actual output is 850. And then we have abnormal loss. We have what we are calling abnormal loss. So is there somebody who can tell us, first of all, the abnormal loss was 50. Please tell me something about valuation of the abnormal loss units. Abnormal loss units valuation. Anything you're able to remember about how we value abnormal loss? I'm able to remember something. That abnormal, just like abnormal gain, they shall always be valued at the same amount. We value our good units. They carry the cost over the actual output. The same cost. The cost you'll have here is the same cost you'll have here. So it means that these abnormal loss and the actual output valuation, you must use a process cost per unit formula. You must use a formula. And ladies and gentlemen, are you able to remember the formula for process cost per unit? Process cost per unit. Yeah, I'm able to remember this very well. We said we take the total process cost minus normal loss, scrap value, normal loss, scrap value, all over. Please listen. I'm bringing in something new because now we are becoming professionals. Now we are becoming professionals as we get along with this, divided by input units minus normal loss units. This is the formula we shall be using now consistently, especially now that we are going to what we call work in progress. Yeah. So in this case here, can somebody give me the total process cost? Total process cost, you add these expenses on the debit side. Add all of them. So the total process cost, anybody who is able to give me this figure, this will be the total process cost. Yeah. So total process cost, I'm being told is 4,500. 4,500. Minus the scrap value of the normal loss. Scrap value of the normal loss is here, 900. So minus 900 all over the input units. Input units are these material units. The material units were 1,000 minus the normal loss units. Normal loss units, which are 100. Normal loss units, which are 100. So is there someone who is able to do their abracadabra here until they give us the final answer? So you say open brackets, 4,500 minus 900 close, divided by open brackets, 1,000 minus 100 you close. Ninjas are giving me a figure of 44. These ninjas are giving me a figure of 44. So remember, 44 is process cost per unit, applicable for actual output, abnormal loss, and what we shall be calling abnormal gain. So here, you put here 44 like that. And then now you do your multiplications, you give me the totals. So then what will be the total value of actual output? What will be the total value of actual output? 850 times 44. 850 times 44, 37,400, 37,400, 37,400, and then 50 times 44, 50 times 44, Because remember, this is per unit, eh? So this gives me 2,200. And you can easily mark for yourselves because this account has to balance. You see, you have told me that this is 4,500. So if you are correct, when you add this side, we should also be able to get 4,500. We should be able to get 4,500. If you are correct, we should be able to get 4,500. Is that okay, ladies and gentlemen? Yeah, great, great, great. Thank you so much. And then please, the examiner will always ask you to do an abnormal loss account. The examiner will always ask you to do an abnormal loss account. Abnormal loss account. So this abnormal loss account is simple, a very, very simple account. It's basically a losses account. Yeah, you see, you are the credited, like now you'll bring the normal loss here, right? You will bring the normal loss here, all right? You bring the normal loss here. So here the normal loss was credited, it will be debited here. So we have here normal loss, 900, no, 100 at 9, giving us 900. And then we have abnormal loss, which was, ladies and gentlemen, credited here. So again, we debit it here. So we have abnormal loss. So abnormal loss, I can see 50 at 44, giving me 2,200. 2,200. 2,200, giving me 2,200. Now, ladies and gentlemen, please listen. How many units now do we have representing the loss? Total loss will be 150, the total loss. Total loss will be 150. So these total loss units, we shall scrap them. We sell them and we receive money through the bank. So we debit bank account, we credit this account by saying bank. So the bank will be total here is 150. 150, which is 150. Don't forget to scrap them at the scrap value given. We scrap them at the scrap value given. So 150 times 9. 150 times 9. So I'm being given a figure of 1350. I'm being given a figure of 1350. So meaning that the gain we are going to make, we shall, this will be a loss. The loss here, we shall be able to take the loss, the P and L. The loss on disposal. Loss on disposal will be the balancing figure. Yeah, so we'll be able to come, ladies and gentlemen, here and add. So this gives me 3,100. This will be 3,100. So then what is the balancing figure? The balancing figure, I'm told, is 1,750. The balancing figure is 1,750. Is 1,750. The balancing figure is 1,750. The balancing figure is 1,750. So, and I can justify this because, ladies and gentlemen, you can see the abnormal loss units, abnormal loss units, they are worth 2,200. The abnormal loss units are worth 2,200. That's abnormal loss units. They are worth 2,200. But in this case, I'll only scrap them. Remember, there are 50 of them. There are 50 of them. And I'm going to scrap them for how much here? Somebody for just 9 bob. So 50 times 9, 50 times 9. Can somebody give me this figure? 50 times 9 will give me how much? Will give me 450. 450. So you can see they are worth 2,200 and I'm going to sell them for 450. Then what loss am I making? What loss am I making out of this? What loss will I make? What is 2,200 minus 450? 2,200 minus 450, it gives me the same amount which I've been able to get from the abnormal loss account. But the examiner needs you to do it this way, not shortcut. The examiner needs you to do it this way because we as examiners, we shall always mark the entries. We shall always mark the entries. We shall always mark the entries. So can I move on to something different, my good students? Can I move on to something different, my good students? Yeah, with your permission now, I will be able to go to a question that has an abnormal gain. That has an abnormal gain. A question that has an abnormal gain. So you can see number 5 here, abnormal gains. In the same way that the actual output may be less than expected. In some months, it may be more than expected. If this happens, then we say that we have an abnormal gain. The treatment of abnormal gain is exactly the same as for abnormal losses. So then I will be able to go to example number 4 before I start looking at your past papers, ladies and gentlemen. Example number 4, we are told during June, the following costs were incurred in a process. Materials 2,000, 18,000. Labor cost 36,000, overheads 27,000. There's a normal loss of 10% of input was expected. The actual output here was 1840. Losses are sold as scrap for 9 per kilogram. They want me to calculate the cost per kilogram, prepare a process account, and actually it's supposed to be an abnormal gain account. I'll be able to change later, abnormal gain account. So I want you to do me a favor. I will give you exactly 3 minutes. Can you kindly try putting up a throughput account for me? Please give me a throughput account here for Mwalimu. Do a throughput account for Mwalimu. Because it's never process costing if you don't have a throughput account. If you don't have a throughput account, it's never process costing. Throughput. Who will be able to finish this? Who will be able to bail the cat as fast as possible? Yeah, and I liked in this case here some students, actually 2 students, did their cut. These students cannot fail. Yeah, and this is what I've been marking in the morning. They'll be able to get their scripts when they come on Thursday. Yeah, these students in this case here, they have known that Mwalimu gives minimum of 3 cuts as I teach my management accounting. And that is why students that I teach, they normally pass all of them. So like we have this lady called Marion here. She did a wonderful job about, in this case here, 5 pages of the continuous assessment test. And then we have one gentleman who he never wrote the name on his booklet here. He has bought a booklet for egg tests. Yeah. Yeah, for tests. And remember, once you do my test, you can never go wrong. Never go wrong. Yeah. So I expect the students who are with me online to ensure that they're able to finish their cut and then they share with me on WhatsApp for marking. Don't take this for granted. I can't sit down to set just a cut for nothing. Trust you me. This is a one-term paper. This is a one-term paper. And one of the ways of ensuring that you pass right away is this self-evaluation. So I'll be able to give you another cut at the end of this month and then one mock. Yeah, before you do your exam. And the moment you do the 3, we can even bet with you. We can bet with you. It will be one term. It will be one term. And I even liked yesterday, students were very happy in the MA group. Yeah, they were saying that Mwalimu, we will pass. The approach we're giving here is really nice. We shall pass. That is the great confidence we need, but most importantly, ensure that you are able to do what here? Do your cuts. Joseph has already gotten. The cuts were posted in the group. We can repost again. We can repost again. We can repost. We can repost. Okay, great. I'll be able to repost and then you get remind yourselves. It will be very, very important. So what these students are telling me is that Mwalimu, it's an abnormal gain of 40. 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 Yeah, so we have here Yeah, so we do a throughput account. So the throughput account, throughput account, yeah, it's a material movement account. So I can see input in the form of materials. The input there is 2000 kgs. 2000 kgs. And then, ladies and gentlemen, I go to the other side, I can see a normal loss of 10%. So I'm able to see a normal loss of 10% of 2000, which gives me 200. And then, ladies and gentlemen, I can see an actual output of 1840, actual output of 1840. So, and that is it. So go ahead and do your balancing figure. Go ahead and do your balancing figure. So in this case, your balancing figure, if you're keen enough, you must have realized that this side is heavier. This side is 2040, 2040. So meaning that the balancing figure is coming here. If the balancing figure is coming here, then I will have what we call an abnormal gain. An abnormal gain. That's why we are debiting this side, and then we shall be able to credit. Remember, gains are credited to the P&L. Once I get monetary value of this, I'll be able to credit abnormal gains to the P&L. If it's here, it would have been an abnormal what here? It would have been an abnormal loss. So up to here, ladies and gentlemen, are we together? Are you able to follow up to here? Are we together? Are we together? Yes. Thank you so much. Then after that, we should be able to go ahead and do a process account. We should be able to go ahead and do a process account. So we do a process account. Very easy, easy peasy. Very easy. So we have here a throughput account is over. So we have a process account. A process account. So we have description, units, cost per unit, value. We have description, units, cost per unit, value. All right. Now, ladies and gentlemen, after that, we should be able to post our throughput. Start always with the throughput. The throughput, you bring the throughput. For example, we had input material cost. $2,000. We had normal loss. 200. And they have told us we are scrapping at 9 bob still. So 209, that gives me 1800. We have in this case here abnormal, actual output 1840. We have abnormal gain. Abnormal gain of 40. Yeah, so apart from materials, we have labor, and overheads. So labor, ladies and gentlemen, we look at the question. So you can see, ladies and gentlemen, here that materials, they are worth 18,000 in total. So materials, 18,000 in total. Then we have labor. Labor cost is 36,000. Labor cost is 36,000. And then we have overheads. Overheads over how much? Of 27,000. Overheads of 27,000. Yeah. So then I only have two things to talk about here, to value here. I only have two things to value here. I would want a value for the normal gain. I would want a value for the actual output. So these two things, I'll have to use the process cost per unit formula. So process cost per unit equals total process cost minus normal loss scrap value all over input units minus normal loss units. So is there somebody who is able to give me the total process cost by adding these three? Please, can somebody give me the total process cost by adding the three? Because costs are normally debited. So somebody is giving me 81,000. 81,000. I don't know whether this figure is correct. Somebody is giving me 81,000. Is that figure correct? I think so. Thank you so much. So then the total process cost will be 81,000 minus normal loss, scrap value, 1,800, divided by input units. Input units, what do we have here? 2,000 minus normal loss units. Normal loss units, they are 200. So then are you able to move slowly and give me the final answer here? 81,000 minus 1,800 equals divided by 2,000 minus 200. I'm being given a figure of 44. So this 44 is what you put there and here. That is what you put there and like that. So then you multiply. So 40 times 44. Can somebody give me this 40 times 44? How much are we getting here? 1760, I'm told. 1760, I'm told. 1760, I'm told. And then we have 1840 times 44. 1840 times 44. 80,960. 80,960. And then now you evaluate whether your process account is summing up, is casting. We talk of casting. Is the process account casting? Let's see. So of course I expect this side to be heavier. So you take this plus this, give me an answer. 1,800 plus 80,960. So I'm being given 82,760, 82,760, 82,760. And I suppose then this one, of course, as an accountant, you simply rub this, yeah? It has also to be 82,760. You rub it professionally. It has to be 82,760. Is it coming to 82,760, somebody? Yeah, thank you so much. Your process account has agreed. So from there, you go ahead and do an abnormal gain account. Abnormal gain account. This shall be a gain. Don't forget that always the normal loss has to be transferred to these gains and losses. Always. Start with normal loss, which is credited here. So here shall be debited. So normal loss. So normal loss is 200 at 9, giving us 1,800. Giving us 1,800. Yeah. And then we have abnormal gain. It's debited here. So it shall be credited. All right. So we have here from the process account, abnormal gain. Yeah, it is 40 at 44, giving us 1760. Great. Giving us 1760. Great. Now, ladies and gentlemen, you have to be a very, very bright student. You see, we expected to lose how many units? We expected to lose 200 units. But something miraculous has happened. Something miraculous has happened. We've been able to save through an abnormal gain. How many units here? 40. Yeah. So out of 1800 expected loss, there is an abnormal gain of 40. So basically, in this case here, the scrap units will be 1800 minus that 40. So this one here, we shall sell them at 9 bob and receive the money in our bank account. Because you see, as process costing experts, we expected the loss to be 1800. No. Wrong. We expected the unit here to be 200. Sorry for that, I was picking the value. We expected the loss to be 200. Sorry for that, 200. But we accidentally, we never expected this, but there is a good accident that happened and we saved. So it will be 200 because we expected 200. Remember, these are units. 200, but we saved 40. So then 200 minus 40, whatever answer you get, times 9. That is what we shall be able to receive in our bank, which gives us 1440. 1440 like that. So then go ahead and balance. Given that this is an abnormal gain, you are going to take a gain here to the P&L, profit and loss account. So come here and balance the two accounts, the two sides, I mean. So is there somebody who is able to give me 1440 plus 1760? How much are we getting? I'm so sure by the time I do the second one, you'll be very good. So I'm being given a figure of 3200. 3200. So this is 3200, meaning that this side must also be 3200. So the balancing figure, which is going to the P&L on the credit side of the P&L, remember it's debited, will be how much? 3200 minus 1800 will be 1400. So the P&L, you take 1400. I'm 100% sure this at times confuses, but the moment I do another question, you guys will be comfortable. You'll be comfortable. You'll be comfortable. And then the most important thing, of course, for now, is you first of all appreciating how we do the process account. So can I change gear and go a little bit higher? Can I go to something different? Can I change gear a little bit? Can I change gear a little bit? Yeah, thank you so much. So this gear then that I'm changing, I'm straight away going here. I'm pushing this syllabus in a very, very excellent way. Process costing, joint products. After joint products, next week, then we shall be, not next week, but this week, we shall be able to finish with closing, work in progress, and opening, work in progress. So ladies and gentlemen, what are joint products? Remember, there are those products that will go through the same process, but during the output stage, then they'll be able to basically go their separate ways. So we have a process here. This process, for example, could be beer manufacturing. Yeah, beer manufacturing. So all this, is passing through the same process. But at the very end here, there will be now a few chambers. A chamber where they'll be able to add something small, could be color or taste or whatever, and then we get Guinness. They come and add something here. At the very end, they get, in this case here, for instance, Tusker. So joint products, ladies and gentlemen, you can see they were joined at the hip to the very end. At the very end, now there is just one small thing that they tweak around to get different products, which are of almost the same value. But ladies and gentlemen, if, for example, a particular process leads to production of, say, 2 products, maybe in this case here, which example? You're producing chairs. You're a carpenter. So in the process of producing these chairs, then you end up coming up with 2 products. One product will be the chairs you were supposed to produce. The other product is sawdust. What is the relative value of sawdust to a chair? So, ladies and gentlemen, you can see sawdust is almost valueless. It shall be able to attract, of course, some value. So then automatically sawdust becomes a byproduct. A by the way, product, byproduct. Joint products, they must have relatively the same significant values. So we are told here sometimes one process may produce several products. In this case, we need to decide on a cost per unit for each of the products. These products produced in the same process are known as joint products. Joint products refer to our main products with full sales value. However, there may be an additional product or product which is produced incidentally and has a relatively low sales value, effectively a waste product. So this is known as what here? A byproduct. They normally have very low sales values. Accounting treatment as I disappear. Any sale proceeds of a byproduct, that waste material, yeah, like the sawdust, they are subtracted from the joint cost of the process. The net total cost of the process is then split between the joint products. For the examination purposes, there are two ways of splitting the joint costs. We have physical units basis. Number two, we have what we call market value basis at the point of separation. However, I will still teach you another third method known as net realizable value. But if you look at your past papers, normally they want you to split the joint costs using physical units or market values. We start with the first one, which is the physical units basis. Under this method, the same cost per unit is applied to all the joint products. And I have an example one there. During August, the following costs were incurred in a process. We have materials, 3,500 kilograms, 5,000. Labor and overheads, 2,300. The production from the process was as follows. Product A, 1,000. Product B, 2,000. And then we have a byproduct, 500, whose scrap value was 0.2. Yeah. Calculate a cost per kilogram and a profit per kilogram for A and B using the physical units basis. So, ladies and gentlemen, the first thing that I will do is to recognize that this is a question of multiple products being produced. And what is the total joint cost? You can see into this process, we've been able to put in materials worth 5,000 and labor worth 2,300. So the first thing you need to do whenever you see multiple products being produced, please go ahead and give us the joint cost. So we have joint process cost. Material cost, 5,000. Labor cost, 2,300, giving me 7,300. So this is the total joint cost. But in the process of making our joint main products, we incidentally got a byproduct. For byproducts, the rule is very easy. Byproducts, you shall always sell them. Like the sawdust, you sell it and then you use it to redeem your cost, to reduce your cost. So less byproduct sales value. Call it scrap value. Scrap value. So remember the byproducts, they were 500 units and each is supposed to be scrapped at 0.2. I can share the handout. I can share the handout. Yeah, you can see, my good students, that the byproduct is 500 units. Yeah, scrap value of 0.2 per kg. So can somebody do this multiplication and give me a figure? Can somebody do this multiplication and give me a figure? Somebody do multiplication and give me a figure. So then this gives me 100. 100. So remember, the byproduct, it relieves you. Yeah. It reduces your total cost. Yeah. So in this case, you come and give us the net joint costs for apportionment, 7,200. 7,200. Yeah, it was shared. The handout has been shared in the group. If you're in the paid group, 2T, are you in the paid group? If you're in the paid group, how comes you haven't seen? Is there somebody who has seen our handout, which has been shared in the paid group? Anybody who has been able to see our handout in the paid group? It is there. For evening group, it's there. Even early morning, it was shared. Even early morning. Even early morning. Yeah, please check. If it's not there, try to reshare. Try to reshare. Do we have students who are in this class from the early morning? Do we have some students who are coming here from the early morning group? Early morning group. Are they there here? Are they there? Do we have them here? Okay, great. So from the early morning, thank you so much. Are you able to share that handle so that Bonatuti can see it? If you are here from the early morning, please reshare. Once you get to see Tuti, you can give me a thumbs up for me to continue. You can give me a thumbs up for me to continue. Iltumwa 12, 12, 12, yeah. Thank you so much. Iltumwa 12, 12. Thank you so much. Thank you so much. Thank you so much. So now these net joint costs are the ones that are supposed to be apportioned. And remember here, the examiner wants us to use physical units. The examiner wants us to use physical units to apportion this. So the net joint cost to be apportioned using number of units produced. Net joint cost. Of main products. Don't use byproducts. So we have our joint, net joint cost, which is 7,200. We have two main products, A, B. We have two main products, A, B. And these two main products of A and B, do we have their physical units? Do we have their physical units? Yes. Because this physical units basis, product A, it is 1,000 kilograms. B is 2,000 kilograms, physical quantity, physical units. So this is 1,000. This is 2,000. So if you add the two, you will get 3,000. So proportion wise, this will be 1,000 over 3,000, 2,000 over 3,000. Now you can do your multiplications. So you take 7,200 times 1 over 3. Oh, they're selling prices? No. No. Use no. It'll be bias. No. No. You can see here, product A 1,000. Selling price is the one that is 5. Selling price is the one that is 5. Kenya shillings. Selling price is the one that is 5. All right. All right. So no problem here. It happens here. So then I'm being told that the first one is 2,400. Is that okay? 2,400. How about 7,200 times 2 over 3? 7,200 times 2 over 3. 4,800. 4,800. 48. If you add the 2, of course, you'll end up getting 7,200. If you add the 2, you'll end up getting 7,200. Yeah. And then now, ladies and gentlemen, come and repeat here quantity. So remember, this is total cost. Yeah. So quantity, this is 1,000. This is 2,000. So give us cost per unit. You will see this method is not very, very good because you're going to get the same cost per unit for these products. The cost per unit will be the same. How do we get cost per unit? You take total cost, you divide by quantity. So you divide. You can write like this for your revision. Yeah, 2,400 divided by 1,000. So this one here gives me 2.4. Is it? You guys have started slowing down. You started slowing down. You started slowing down. I don't know why. They've started slowing down. 2.4, right? And then, of course, the other one, the cost per unit will be 4,800 divided by 2,000, which will as well give me 2.4. That is a disadvantage of physical. You can't tell me that if I'm producing sodas, Coke and Fanta, they will cost the same. It's not possible. You will get one major product having a little bit what here, a higher cost. Yeah. And then, of course, they have given us selling prices. They have given us selling prices. Are you able to remember the selling prices, my good students? A selling price. So A selling price, I can see A is going for 5 bob. Then this other one, A is going for 2 bob. Yeah. And then I'll give me profit per unit. 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 So profit per unit, we shall take the selling price minus the variable cost. We shall take selling price. We shall take the selling price minus variable minus this cost per unit. So 5 minus 2.4, 2.6. This will be 2 minus 2.4, which gives me a loss of 0.4. Because basically it was made to absorb a higher cost than it could absorb. Yeah. And ladies and gentlemen, remember what I'm doing. These sessions, I'm only teaching them 1 hour, 1 hour, 1 hour. Yeah, so that I can get well much faster, and then I resume my duties 100% now from coming week, or rather from Thursday. Otherwise, it has been a pleasure hosting you great students of mine. And I hope you are seeing the value that RCM is adding. Yeah, you've got videos all over in the LMS, Learning Management System. You have a whole platform of WhatsApp where you can do a question and post it there, and people are able to respond. Yeah. Otherwise, thank you so much. When we meet next, I'll be able to finish the small area left on byproducts, and then I go straight away to closing. Yeah. RCM is the place to be. FM, yes, we are meeting at exactly 2 p.m. 2 p.m. again for an hour. That'll be enough. But of course, whatever we do, those people that I've taught, it's unfortunate that I wasn't teaching the intermediate level. Ask the students I've taught at this higher level. Yeah. The way I'll be able to finish this syllabus, you can't even understand. So long as you're doing your cuts, you're revising, you're watching those videos. You see, if you go to a learning management system, you will see like management accounting, special revision. Yeah, please watch them. And then, of course, you will also have other great teachers. Watch their videos. At RCM, there is no teacher who is not good. Watch their videos, but I mean, you crown them with the CPA Chief Ninjas videos. And of course, if there are new students here, I'm so sure people are struggling with management accounting out there. If you guys were to be honest, I'm 100% sure if there is somebody who is repeating MA who was taught outside there, MA by, I'm not saying that they're bad, but people are really struggling with this management accounting. They are really, really struggling. And it's an easy paper. It's an easy paper, you will not believe it. It's a very easy paper. So long as you have proper foundation, we are going to overcome. We shall overcome. Yes, 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 yes. Thank you so much. Next semester, AFM, we charge 4,800 per paper, 4,800 per paper. And then, of course, it will be very important for you to do what here to know our phone number. Please call this number and you shall be assisted. You shall be assisted. All right. For FM special revision, you can see George is saying, Mwalimu, yeah. I'm telling you outside there is a big problem with management accounting because you'll get like somebody who has never taught this paper, they'll start pushing you the past papers immediately, which is not right. First of all, we lay down the foundation for process costing. By the time you're going to pass paper, it's only one question we move, one. And then we do now one big, because now you have that overall knowledge, one big question, you are done. We go to the next topic, which will be called marginal costing. Very good topic. Very, very good topic. All right. So please, if you want these timetables and everything, just call this number. Otherwise, thank you very much. Be blessed. Bye. 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 Thank you so much. Yesterday class, I will be able to upload it. I'll upload it now. Thank you so much. Thank you so much. Next special revision, Thursday evening, Thursday, 6 p.m. Thank you so much.